with Bank of Canada's interest rate raise so fast and so heavy? Is Toronto real estate market crashing? Which area dropped the fastest and deepest? Hi, my name is Priscilla. I'm a real estate broker in the Greater Toronto area. Today, let's take a look at 2022 May Toronto Real Estate Board Market Watch Report. Like in the past, today I use two graphs. The large one is May's performance, and the smaller graph is one more month before in April. So when we compare the big to small, we see month over month change. Together, we study five parameters. Under each one of these five, we see a percentage change. So that's year over year change. Okay, so let's first take a look at the average sold price across the whole GTA for all property types. This month, the average sold price came down to 1.21 million. So this is a 3.3% decrease from April's 1.25 million. April's 1.25 million is already 3.6% drop from March. So we can see that the price decline continued. It's just the degree has moderated a little bit. And then when we take a look at the market activeness, so we see that the transaction volume decrease is even more obvious. In May, we only have 7,280 properties sold. And this is a 40% drop from same period last year. And even compared to April, 8,000 properties sold, we still have a quite obvious decrease. Quite a few buyers want to see how the market will turn. So right now, they stopped their purchase plan and turned into rental. So that's why at the same time, we can see in the past 2 months, the rental demand spiked quite a bit, and the rental price increased quite significantly. Then let's take a look at the supply side. So new listing, we can see this month is about 18,700 units. This number, this level remains the same, very similar level to same period last year and last month. It shows there are not more sellers getting panic and trying to get rid of their properties as soon as possible. However, the active listing did go back up to above 15,000. Why is that? It's because the transaction volume, the lot less properties sold in May. Also, for the first time in very, very long time, the market eventually stepped back to buyer's market. For quite some time, the market was a very strong seller's market. You must remember in my earlier monthly watch report, I talk about there was a bidding war. Very often you see a dozen of offers. It's no longer the case since March and April, which was a balanced market, but the trend kept going. So this month, we really step up back into buyer's market. As you can see, we now have over 2 months inventory, meaning using current selling speed, it takes above 2 months to deplete the market's inventory. The last parameter is days on market. So it takes slightly over week, but less than 2 weeks for properties to be purchased by buyer. It's longer than last year and also last month. However, 12 days is still considered short. So after the general GTA market, today I also choose 4 cities to share with you how their average sold price changed in the past year and also. So we're looking at Richmond Hill, Markham from York region in the north, and Mississauga from west, and Oshawa from the east. So in May, Richmond Hill's average sold price is 1.49 million, Markham 1.37. If we compare with their peak, Richmond Hill's peak was realized in January 2022, 1.62 million, and it dropped 9%. But for Markham, the peak was 1 month later in February, 1.55 million. It dropped 13%. We do see that in just a quarter, like just 4 months time, they went drop average like 10% in these two cities. sounds like very significant, right? But it did not write off all the increase from last year. Let's take a look at what these two cities were in 2021 May. So 2021 May, both two cities are around 1.32, 1.33 million. So if we do a year-over-year change, we see that in Richmond Hill, we're still at 13% up. And even Markham, which has the increase has been written off a bit more, still has 4% increase. So if you want to ask, is the market crashing? It all depends on you want to compare with what. With the peak, yes. With last year, not really. Okay, so if you're very observant, you'll probably realize it says, oh, the Richmond Hill performs much stronger than Markham because the increase is higher and the drop isn't as steep. But is that really so, or there's something else? So the conclusion is really depends on which is your baseline. So comparing with last May, we just saw the number. But if we compare with January 2021, it looks like this. Markham has a much lower starting point. So if you compare with January 2021, actually Markham still has 28% increase and Richmond Hill has 22%. So Markham actually has higher interest. So the more information you have, the more informed conclusion you can draw by yourself. Okay, so before we go, we also take a look at the Mississauga and Oshawa. So we all know that Durham had the highest increase in terms of the percentage growth, including Ajax, Pickering. Oshawa is one of them. So Oshawa, you can see that most of the time the norm average sold price is below 800K, but then in the late stage of COVID, it went up to close to 1.1 million. Although it has the highest increase, it also dropped so quickly. So right now in May, it almost go back to its original price, slightly higher than 800,000. However, Mississauga really kept its momentum or kept its growth. So we can see it started from less than 900K and at its peak, it's about 1.2 million. Even though after the interest rate raise, it still remain at high 1.1 million. Last but not least, I want to address one question raised by some of my YouTube fans. In past videos, I talk about new immigrants brought the demand for accommodations, and that's a force to push up the property price. But they were saying, actually, Canada has immigrants for quite some time. Why it's still a force. So today I gathered some information. We're looking at a graph of total net migration of Ontario starting from 1992 until 2022. So we all know attracting new immigrants is a general policy for Canadian government. Both parties agree that new immigrants is a strong force to Canada economy. So we've been doing this for quite some time, but not the strength, not the activeness of implementation for this policy is the same. So we realize from this graph that you can see for yourself how steep the increase become, even comparing with last peak in 2000. So just imagine when these people land, I would say more than 60% choose GTA, and would these people release their accommodation needs either in rental or purchase? Last but not least, since so many people ask, I also want to touch base on the interest rates relationship with property price. So now we are looking at past 20 years, Canada's prime rate and GTA's average property sold price. The column is the prime rate and the line, the red dot line, is the price. So we can see even though sometimes the interest rate goes up, the property price is not affected and it's still going up. And we also see sometimes when the interest rate goes down, the property price remains flat. So now we have the big picture. I think you can see for yourself and draw a conclusion. Is the property price 100% correlated to just the interest rate change, or is there any other factor such as supply and demand? This is the end of this video. Looking forward to connecting with you soon.